So how do you become bankable? So number one, to be bankable, you need to be credible. That means you need to know what you're doing. You need the proper education and training in order to convey confidence in your lenders that you can handle the investment that you're seeking the money for, whether you're buying a company, developing real estate, buying houses, flipping houses, whatever it is you're doing. You have to convey the confidence that you are competent, that you're an expert, that you know what you're doing, you know the market, you know the product, you know the project, you've got the proper training, you've got the proper education and experience in order to take on the project, and that you can show that you have the ability to bring the project to fruition, to complete the business plan and pay the lender back. So that's number one. You have to be credible and you have to convey that you have the expertise. And if you don't have expertise, like you don't have to be a builder, you don't have to know how to build a house, build a building, you don't have to know how to run a company necessarily if you're going to buy one, or if you're going to develop a property, or if you're going to build a house or flip a house. You don't have to actually know how to swing the hammer. You don't have to, if you're buying a restaurant, you don't need to know how to cook, things like that. But you do have to have the right team. So if you're developing a property and you're building something, then you have to have a team that has experience doing the type of project that you're seeking funding for. A licensed general contractor with the proper insurance, experience, credibility, criteria, credentials, and everything that needs to be met to give the lenders assurance that the job will get done and that they are financially stable enough to complete the job. If you're buying a company or a business, you need to make sure that there's a management team involved, kind of like the Warren Buffett model, right? He buys great companies with great leadership, great management, that he can rely on, that he knows are going to continue to run the operations successfully and profitably. So that's what I mean by having the right team. When it comes to building, you want a builder that builds the kind of product that you're looking to do. You don't want to hire somebody to build an apartment building that just builds houses. You don't want to hire somebody to build houses that builds apartment buildings. So you want to make sure that the general contractor is qualified, experienced, and competent in the area and the type of projects you want to build. Once you have those two things put together, your experience, expertise, and credibility, that of your team, then you have to package your financials and you have to be qualified. So that means you have to have some cash, you have to have reserves. Sometimes lenders are going to want you to make a deposit with them if you use a local or commercial regional bank. They are relationship driven, meaning they want your money in their bank because that's how they make money, by building up deposits, levering that, and then loaning money out. That's how they profit. So they are there to make money, and they make money by lending money, and they make money by having deposit accounts. So be prepared to make a deposit in the bank. That's just part of the relationship process with a local, regional, commercial bank. And then above reserves, you want to have some cash, you want to have some reserves, you got to have some, good credit, and you want to make sure that you have assets. And if you don't, that's okay. You can get started without assets as long as the project in itself has equity in it, or you have good credit, good reserves, good income, things like that. And you want to get your financial package in order. That means all of your last 3 years tax returns minimum, any profit and loss, current profit and loss balance sheets for any businesses you're involved in, and then of course your personal financial statement, which lists all your assets and liabilities, current assets, current liabilities, and all of your long-term debts and things like that to get down to your net worth. So those are the types of things you want to have put together. You want to have that all packaged up nice and neat and ready to send off after you meet with the bank. So when you do your first meeting with the bank, you don't want to necessarily bring all that in with you. It's just sitting down, getting to know them, find out, what kind of loans they're interested in, what type of projects they like to lend on, what kind of businesses they like to lend to purchase, what their lending limits are, whether or not it has to go to committee, how their process works, things like that. When you ask questions like that, the lender knows you know what you're doing. So once you have that initial meeting to find out if what you're looking to do is in their wheelhouse, then you follow up with an email and a complete financial package along with the loan request that you're looking for. So you just put together a little executive summary. You have your financial package completely put together in a little PDF, and you always want to keep that up to date and ready to fire off at a moment's notice because they will ask for it again. You always have to send that out 2 or 3 times when you're in a loan request process. Then you want to have a small executive summary of what it is you're seeking. So I want to borrow X amount of dollars to do X, and the investment's going to be worth X. The business plan is Y, and I'm going to repay you your money because of Z. So it just has to be a business plan. So for instance, I want to borrow $1 million to build a little townhouse development. The land is, $200,000. Building cost is $600,000. I've got $200,000 in equity in it. From a loan standpoint, and the end value is going to be 1.4 million. So there's a $600,000 profit margin. The bank's going to feel comfortable in that. I'm going to supply all the supporting documents, contracts, specifications, plans, things like that, so that the bank can evaluate it. Contracts with general contractors, plans, specs, those types of things. Then the bank can evaluate the package, your financials, the project you want to do, make a decision, and provide you with a term sheet of the loan terms and conditions to which they're willing to lend you the money, so you can decide if you want to move forward with it. And then once you do, they're going to do the appraisal and all that kind of stuff. So you don't need to get an appraisal, but you do need to provide them with a value. And it could be a broker's opinion. It could be your own your own statement of the value. But if you have a third party validated, that's always best, unless the lender knows you and you have a relationship and they know you know what you're doing, and they just take your word for it for the values for the initial term sheet. And they're always going to base it on the appraised value or cost, whichever is lower. Before you get to the closing table, they're going to order all the title reports and appraisals and all that kind of good stuff. Well, the lender won't do the title report, but your closing attorney will, or title company. So that's the basics of how you become lendable in the way you present your package to a lender. And remember, when you sit down with that lender and meet with them, ask good questions. People know you know what you're doing by the questions you ask. So ask good, intelligent questions, and be easy to work with. Have your stuff together, be organized, efficient, and make sure that you appear professional, credible, and that you know your stuff.